So I think first and foremost, we talked about it, a distribution from an IRA is typically taxable. When you're doing a QCD, you're paying zero tax. Okay, so that's first and foremost the main benefit. Secondly, when you have an IRA and you get to a certain age, that age right now is between age 73 and 75, the government starts to say, hey, you have to take out a distribution in what's called a required minimum distribution in order to pay some tax. We've allowed you to defer this money for many, many years, and now it's time to pay the piper. So they make you take out a little bit of that account value, pay tax on it so the government can get their money. Well, if you're pulling dollars out of your IRA and giving those dollars directly to a charity, your IRA balance is declining. It's declining, and so that means that the future required minimum distribution that you'll be forced to take is going to be lower down the road. So these forced distributions are now less because you're taking part of that account balance and shifting it to a charity as opposed to letting it sit in the account and compound and writing a check from your checking or savings account. If you're at the age of between 73 and 75 or older, and you're taking these what are called required minimum distributions, the QCD satisfies that. So if the government were to say to you, you're required to take out $40,000 from your IRA this year, and you did a $40,000 QCD from your IRA, guess what? That satisfies the requirement. So you don't have to take additional dollars if you're giving these dollars to charity. So it's not just giving money to charity and I have to take a distribution from my IRA to pay tax. The QCD counts as the RMD for the account holder.
So that would in effect keep your income down. You're not taking any additional money in the RMD.
That's right.
Okay.
That's exactly right. So those three benefits that we just talked about, reducing future RMDs, keeping your income lower, satisfying your RMD, that all benefits the individual. Let's not lose focus on the charity. A qualified charitable distribution puts more dollars in the charity's hands or pocket than an individual taking a distribution and paying tax on it. So it benefits the charity. So it benefits the individual, it benefits the charity. There are some other ancillary benefits that we could probably do a whole separate special episode on with regards to you don't need to itemize in order to get the benefit of a QCD. So that's a tax benefit. It also can help lower Medicare premiums. So if you're at the age where income matters, when you're taking money out of your IRA, those IRA dollars can impact your Medicare premiums, and this strategy bypasses all of that income. So that's another benefit to the individual. And I would say, lastly, if you're at the age at which you take Social Security, there's also a calculation made on how much of your Social Security is taxable based on how much household income you have. And that can be impacted by the amount of distributions you're taking from your IRA. And if those distributions are offset by a QCD, meaning the money is going straight from your IRA into the charity's hands, you're not going to increase household income, hence making more of your Social Security taxable.
Got it.
I think those are all great benefits.
Can we go back to the part about no needing to itemize? I just want to make sure I understand that, especially since the standard deduction has gotten higher and higher. I feel like fewer and fewer people are really itemizing their deductions.
Yeah, so meaning if the standard deduction, if you're donating less than the standard deduction, the donation to any charity really does you no favors. You're not getting a tax benefit because you're getting a standard deduction above the amount that you're donating. Okay, so in order to get a benefit, you would need to donate more than the standard deduction to get a true tax benefit to you as the taxpayer. With a QCD, the dollar for dollar transfer from your IRA to the charity skips your household income completely. So there's a dollar for dollar tax benefit for you. You're not recognizing any income and the government's not taking any tax. And the charity walks away as the biggest winner.
Yeah. So there's all these benefits that we've been talking about. We probably should talk about the things you need to remember about QCDs as well.
Yeah, there's a number of factors that really need to come into play. And if you're going to work through this channel of making a QCD, you want to do it right and take the right steps. You want to make sure that the organization that you're donating to is a 501c3 nonprofit. And so it's important. You just want to make sure you check that box that it is a registered nonprofit charity. The QCD limit in 2025 for any individual is $108,000. So if you had $2 million in your IRA, you can't do a QCD and get credit for transitioning $1 million. But you can do up to $108,000. So if $108,000 helps you satisfy your RMD and it's amount that you're comfortable giving to charity, have at it.
That's an annual limit, correct?
That's an annual limit.
Okay.
That's right. So,
and it goes up every year, or at least has in the past?
It has been. It's been indexed with inflation. So yeah, the number has increased over time. We would expect in future years that number would be higher.
Okay.
It must be a direct transfer from the IRA to the charity. So if you're doing a QCD, it can't, those dollars, the distribution from the IRA should not come into your hands. It really needs to be a direct distribution from your IRA over to your charity. I mentioned RMDs and being between age 73 and 75, where you're in that age bracket where you're forced to take a distribution from your IRA. Well, you can actually do a QCD at any age older than 70 and a half.
So it doesn't line up.
So it doesn't line up with RMDs, but they do overlap. Mm-hmm. So meaning if you're going to do a QCD and really maximize the benefit of it, you want to make sure that you're 70 and a half or older.
Okay.
So you might not be at the age where you're forced to take distributions from your IRA, but you can still bypass the government and paying taxes on that distribution. So the last thing I think I would point out is the year-end deadline. So if you're going to do this and you want to get credit for the distribution and the charitable contribution, you want to do it before 12/31. And that's, I think, part of the reason why we're here today and talking about QCDs in January, so that individuals who are charitably inclined can plan for this type of technique if they have IRA dollars, and execute that at some point throughout the course of the year. Oftentimes, I would say we see this done later in the year, but what you don't want to do is understand or learn about this concept the second week of December and not have enough time to actually execute.